Hello and welcome. You're watching India Business Hour with me, Ashmit Kumar. Here are the headlines that we're tracking at this evening. The Indian rupee sinks to a record low once again, weakens by more than 30 paise against the dollar to move within striking distance of the 92 mark. Sensex and Nifty post the biggest weekly fall in 4 months, wiping out 15 lakh crore rupees in market capitalization. Adani stocks see a sharp fall on Friday. Nifty manages to cling above the 25,000 mark. RBI moves to boost liquidity by injecting more than 2 lakh crore rupees into the banking system, announces bond auction worth over 1 lakh crore rupees along with a $10 billion forex swap on the 4th of February. A 90-member delegation from European Union arrives in India tomorrow to conclude a free trade agreement. EU scraps export benefits for 87% of the shipments. Indian government claims exclusions are in accordance with the EU rules and will not have a big impact on Indian exports. Officials from the United States, Ukraine and Russia hold a trilateral summit in Abu Dhabi. This is the first meeting between the three nations since Russia invaded Ukraine 4 years ago. Bank of America CEO Brian Moynihan is upbeat on India and the US economy, expects high growth in US to lift the rest of the world, predicts a couple of Fed rate cuts this year. That's an exclusive. Pharma major Cipla misses estimates in Q3. Revenue declines marginally. Profits plunge 57%. Company lowers its outlook for margins to 21%. IndusInd swings to profit after incurring 437 crore rupee loss in the last quarter, meets expectations in the third quarter. The management says they do not anticipate fundraising in the foreseeable future. Lockheed Martin is committed to setting up a second final assembly line for the C-130J aircraft in India if selected for the medium transport aircraft program. Company's vice president plans to add autonomous tech, advanced avionics and higher fuel range for aircraft in India. That's an exclusive. US President Trump sues JPMorgan and its CEO Jamie Dimon, accuses them of debanking by closing several accounts after the Capitol Hill riots in January of 2021 and seeks at least $5 billion in damages. JPMorgan says the lawsuit has no merit. US President Trump withdraws the invitation to Canada's Prime Minister Mark Carney to join the so-called Board of Peace. This comes after Carney's speech at Davos warning of a rupture in the rules-based world order led by the United States. TikTok establishes a joint venture for its US business, resolving a long-standing dispute with Washington. Oracle, Silver Lake and MGX will each own 15% in the new entity. ByteDance will own less than 20%. Oracle will oversee data and algorithm training for American users. Well, straight to the top story of this evening. The Indian rupee has sunk to yet another record low. The Indian currency has weakened by more than 30 paise against the dollar to move within striking distance of the 92 mark. Latha Venkatesh is joining us now with more details. Latha, tell us what has triggered this dramatic fall.
Well, actually, it was off to a very steady start. The rupee closed yesterday at 91.63. Early morning trades were at 91.50. So actually, the dollar was cheaper by about 15 paise in early trades. And it seemed like that up until noon. One is normally worried about fixing, which happens around 1 o'clock when the month ago NDF trades mature, the swaps mature. But, even after 1, it was a sea of calm in the currency markets with, basically yesterday's levels holding. There seems to be a selling post in the afternoon trades. Now, it is difficult to say whether the rupee triggered this stock fall or the stock fall triggered the rupee fall. We often used to say in days of yore that when London opens, there can be a seminal shift. So it's possible that with London markets opening, foreign funds came with a bout of selling. Already the Adani news, which was carried in Financial Times, had created a negative buzz on those stocks that the SEC may the SEC may ask permission to send notices, summons. That was creating a negative feeling, but it didn't impact in the early part of the trade. There were even some dealers telling us that actually they are normally people who who are custodians and who buy dollars for FPIs, but they did not have FPI demand for dollars. And in fact, it was the public sector banks which were buying dollars around that 130 period. So was it a government payment going out? These things are always explained only at the end of the day after the market closes. But like in the stock market, for the rupee at the moment, there are no levels at all. The stop loss is 330 when trading ends.
Well, from the currency markets to equities now, the markets closed in the red with Nifty ending below the 25,050 mark. Nearly 40 Nifty stocks closed in the red. The broader markets also underperformed. Nifty Realty was the worst performing index today. Sensex and Nifty closed lower for the week, while broader markets posted their biggest weekly fall in 4 months. BSE listed companies erased market cap of more than 15 lakh crore rupees just this week. The Sensex, the Nifty and Nifty Bank fell by 2.5% each. The mid-cap index slid by over 4.5%. Now, the Reserve Bank of India has announced fresh measures to boost liquidity in the system by injecting more than 2 lakh crore rupees. The central bank will launch a 90-day variable repo operation on the 30th of January worth 25,000 crores. On the 4th of February, RBI will conduct a forex swap for a tenor of 3 years worth $10 billion. This will be followed by 2 open market operations where the RBI will purchase bonds worth 1 lakh crore rupees on the 5th of February and the 12th of February. In earnings action now, pharma giant Cipla has reported a weak set of numbers in the third quarter, missing the estimates across all parameters. The company's net profit fell by 57%, while the revenue growth was flat on an annual basis. Cipla also reported a one-time loss of 276 crore rupees during this quarter. Cipla management has said that the company will lower its FY26 margin guidance to 21%.
I think, as I mentioned, we fell 1.5 to 2% short on our Q3, and Landrio is a issue which will take some little bit of time to resolve. So we would be lowering the guidance for this full year to around 21% from the previous number.
And staying with earnings, IndusInd Bank swung to profit after incurring 437 crore rupee loss in the last quarter. The management is not anticipating any fundraise in the foreseeable future. Gaurav Javalkar has decoding these numbers for us. Let's go across to him.
Well, IndusInd Bank reported inline set of numbers because if you look at net interest income, that declined by 12.5%. Now, the number looks a bit better than the street's expectation, but there was a one-off of 211 crores in this quarter. If we exclude that, NII came in line with the street's expectation. PPOP, that declined by 37%. Remember, this number was a bit better. And also, if you look at profitability, now bank has reported profits of 128 crores versus the losses that they had reported of 437 crores in just last quarter. Now the profit number is a bit better than the street's expectation. If you look at ratios, net interest margins, that improved almost by 3 basis points. If you look at credit costs, that improved almost by 65 basis points on a sequential basis, almost in line with the street's expectation. And slippages, now slippage ratio, that remains stable, but there are 2 reasons. First is that loan book, that has declined, and that is the reason why if you look at slippages as a ratio, that looks stable on a sequential basis. And second is that management also said that except for the microloan portfolio, other portfolios did not see any kind of spike in slippages. So that is the reason why in absolute terms slippages also remain stable. Lastly, commentary, that remained actually a bit positive, specifically for the MFI segment. What they said is that the slippages were higher in MFI, but they are likely to come down from the next quarter. In fact, the overall loan portfolio of MFI will see some growth from 4th quarter onwards as per the management. And at the same time, there is another comment on the capital raise. Now, management has clarified that bank does not need any capital in the foreseeable future and there are no deals on the table at this moment. So that is an important clarification from the management. So all in all, in terms of numbers, those were in line. Now, commentary was a bit positive, and on back of that, we will definitely watch out on IndusInd Bank.
Right, Gaurav, thanks so much for that. Now, the other big story that we're tracking this evening, 87% of India's exports are set to attract higher import tariffs in the EU market. According to the official journal of the European Union, new rules on tariff preferences will be effective from January 1st this year and will be in effect for a period of 2 years. Indian exports were a part of a generalized scheme of preferences. The GSP scheme allows developing countries like India to export to EU at rates lower than those paid even by most favored nations. The Commerce Ministry has said that this move is a continuation of an existing system and will not cause any fresh impact. The ministry has also said that EU has progressively suspended GSP tariff preferences since way back in 2016. However, the Global Trade Research Initiative expects sectors like textiles, chemicals, plastics to be hit with higher tariffs. Remember, a 90-member delegation from the European Union led by European Commission President Ursula von der Leyen and an EU Council President Antonio Costa will arrive in India tomorrow to conclude talks on a free trade agreement. Well, to help us decode and unpack what that translates to, we're now joined by Mr. Jayant Dasgupta, former Indian ambassador to the WTO. Mr. Dasgupta, thank you so much for joining us on the show. The first question, suspension of GSP benefits to Indian exporters. The Indian government says no impact, but think tanks and exporters are saying that as much as 87% of the Indian exports are likely to feel the pain of this withdrawal of the benefit. What is your assessment of this withdrawal of the GSP benefits, and what do you make of the timing coming just ahead of announcement of the India-EU FTA?
I think this timing has got nothing to do with the progress of the India-EU FTA talks, because this was set in motion in September 2025, according to EU Regulation 1909 of 2025. The EU has been revising its GSP regulations from time to time. The last one took place in 2012. Now, according to the latest regulations of the EU, if a country's exports of particular commodities pass a threshold for 3 continuous years, then that country for those products has to be graduated, which means that the benefits of the GSP will have to be withdrawn. So the EU has done just that, because Indian exports in about 87% of their last 3 years average exports have crossed that threshold by being competitive, and they don't, according to the guidelines, they don't really require this leg up. Now, as far as GSP benefits are concerned, they are on an average about 4.5% of the applied tariffs of the EU. For textiles, for instance, it is about 12%, so 4.5% of that average. Now, that is the kind of impact it will have on the tariffs for 87% of the products. For the balance 13%, that includes some agriculture items, leather items, and handicraft items. So these will not get affected at all, because they will continue to receive the benefits. As far as the sectors which you have just listed out, textiles and clothing, chemicals, plastics, iron and steel, electrical machinery, minerals, all these form 87% of our exports. So this, our exports for last calendar year, were about $76 billion to the EU. So if you take about 87% of that, it will come to approximately $64 billion. Now that is the kind of volume of exports which will not get the benefits of, on an average, 4.5% tariff reductions from the applied tariffs. So to my estimation, it will definitely hurt exports, because textiles and clothing, for instance, if it goes back to 12%, it will not be able to compete with Bangladesh and Vietnam in the garments area, because they enjoy zero duty access. Bangladesh, for the reason that they are everything but arms beneficiaries as LDCs till November 2026.
Right, Mr. Dasgupta.
Vietnam has an FTA with the EU. So Indian exporters will, I think, face the
Right, Mr.
problem.
Dasgupta, that's as far as the GSP benefits are concerned. I'll slip in one more question. The EU delegation is en route. They're expected to land in New Delhi tomorrow. Tell us, from the conversations in Davos, this deal is being referred to as the mother of all deals. Why is that? And how soon do you see it getting effected, getting implemented, getting passed and ratified by the EU Parliament?
Issue is about the timing. I think 27th has been tentatively spoken of as the date on which it will get signed. And from the date it gets signed, it will take approximately 1 year before it gets implemented. Now, according to the reports, apart from agriculture and dairy items from the EU exported to India, barring that, almost all other merchandise goods will receive preferential treatment, which means that India will lower the tariffs on those products. As far as Indian products to the EU are concerned, by and large, I think all products will receive preferences, but not zero duty access. The preferences, in any case, if you look at the EU's tariff profile, it is only about 3.9% or so, which Indian exports to the EU face the tariff wall on an average. Now, that is not going to come down to zero, but it is going to come down substantially. So that is the expectation. As far as why it is called the mother of all deals, the EU and India trade in goods and services accounts for approximately $72 billion plus $136 billion, which is about $208 billion overall, which is far more than the India-US bilateral trade figures and the India-China bilateral trade figures. So that is why, with substantial benefits being exchanged, concessions being exchanged, it will impact a lot of businesses, and there would be growth opportunities across the board.
Right, Mr. Dasgupta, a lot to unpack there. I wish we'd had more time. But clearly, a mother of all deals, that's how it's being talked about from Davos all the way till tomorrow. That's when the EU delegation will be landing here in New Delhi. Big numbers, those, as far as the way forward is concerned for the India-EU FTA. Mr. Dasgupta, thank you so much for joining us, for your insight on this negotiation and this deal going forward. But with that, we're moving ahead now. A quick look at more headlines. Karnataka High Court has lifted the ban on bike taxis operating in the state. The High Court has set aside an earlier order that had forced app-based two-wheeler operators to suspend operations. The High Court has held that bike taxis are free to register bikes as taxis, adding that the government cannot bar registration only on the grounds of them being a two-wheeler. More court action. The Supreme Court has issued fresh notices to Anil Ambani and the Anil Dhirubhai Ambani Group on a PIL seeking a court-monitored probe into the alleged banking and corporate fraud case. The Apex Court has asked the CBI as well as the ED to file status report in a sealed cover in 10 days on their ongoing probes. The court has also given Anil Ambani and ADAG one last opportunity to appear and file their responses in the case. Now, Indigo is vacating 717 slots as a part of its curtailed winter schedule. Remember, the Civil Aviation Ministry ordered the airline to cut its winter schedule by as much as 10% following the large-scale disruptions that we saw in December. Madhya Mujawar is joining us now with more details. Madhya, tell us, how will the airline be impacted by this cutting of slots that they have in plan?
We've now accessed the actual list of slots that Indigo is vacating between January and March 2026. And here's the key headline first. This is not a big hit on Indigo, and it leaves very little room for the rival airlines to meaningfully step in here. Let's break down. Indigo is vacating 717 slots as part of its curtailed winter schedule that was submitted to the ministry a few months ago. After the Civil Aviation Ministry ordered a 10% cut following the large-scale disruptions in December, that 10% cut translates to 214 domestic flights a day. But here's the crucial context. Even after this curtailment, Indigo will still be operating over 2,230 flights every day, including around 300 international flights. So operationally, Indigo remains dominant. Now look at the timing here. Out of the 717 slots, 313 slots fall in January, just 43 in February, and 361 in March, which means January is already almost over, leaving airlines very little time to apply, plan aircraft, crew and operations, and actually deploy capacity on these new routes that are vacated by Indigo. Also important that 403 of these 717 slots are daily services, not one-offs. And 113 of these services are operated by ATR or regional aircraft, and the rest are operated by the narrow-body A320 aircraft. And that's where the second bottleneck comes in, because Air India and Akasa Air do not operate regional aircraft at all. SpiceJet has just 4 regional jets, and Star Air has 11, Fly91 has 3, which are already flying on their planned routes. Alliance Air also has 7 operational regional aircraft now. So realistically, very few airlines are even equipped to pick up many of these routes. Some of the ATR routes Indigo has vacated include Kolkata, Agartala, Kolhapur, Mumbai, Bikaner, Delhi, Dharamshala, Delhi, Mysore, Hyderabad, Madurai, Bengaluru, among others. Even on metros, the slots are spread out as 59 from Delhi, 12 from Mumbai, 95 each from Bengaluru and Hyderabad, 51 from Kolkata, and 52 from Chennai. The Aviation Ministry has asked airlines to apply for these surrendered slots, but there is limited time, limited regional aircraft capacity, limited capacity at all. So while 717 slots look big on paper, in practice, this is a controlled temporary adjustment, not a structural shift in India's aviation market.
Right, Madhya, thanks so much for that. Now, coming up on India Business Hour, officials from the United States, Ukraine and Russia hold a trilateral summit in Abu Dhabi. More details in just a bit. And you can also catch all CNBC-TV18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Do subscribe to CNBC-TV18 Access for exclusive stories. Well, the big newsmaker of the day, Bank of America CEO Brian Moynihan, remains hot on India and the United States. Speaking to CNBC-TV18 on the sidelines of the World Economic Forum annual meeting in Davos, he said that he expects high growth in U.S. to lift the rest of the world.
If you look at our team across the world, we're 3.5%, 3.6% for world growth. We think that India grows in the 6.5% for 26. We think that the U.S. grows at 2.8%, which is a bit ahead of consensus. We think Europe's plus or minus 1%. But the U.S. growing faster on the size of the economy creates a lot of activity around the world because the U.S. doesn't make everything it consumes and things like that. So our economists are pretty comfortable, and they've raised that basically from, say, midsummer of 25 at about 1.5 after tariffs and what's going to happen and all that to come back up to 2.8 now. And so they've been raising it literally each time they touched it. We think the Fed cuts rates a couple times later this year. We think inflation, will work its way down probably towards the end of 27 to the target, more closer to target levels. Unemployment stays reasonable. So if the U.S. is set up pretty well, that helps the rest of the world, but also other countries like India are set up well, and the deregulatory impact in the U.S., interest rates being lower next year versus this year, even if nothing happens, or lower. It's all very positive. And I've said, we're bullish on the U.S., but we're also bullish on a lot of other places.
The other big question is who's going to replace Jerome Powell, and what will that mean as far as the central bank's independence is concerned? The markets have been fluctuating on the back of that, story. Do you think it's going to make a difference who is going to be in Powell's position? Well,
I think there's been a list of candidates that President Trump talked about yesterday. Yep. He talked about when they get in there, they got to make their decisions, and sometimes you have buyer's remorse when somebody gets in there. So he told the whole story yesterday from the stage on Borges Questions, which was, we know it's an independent Fed, and the world knows that the U.S. Fed, and that's a major piece. And so we're trying to be careful who we pick. But once they're in there, they have to do what they think is right based on the position they're in and the dual mandate. And so I think the understanding this is much better. But he's got a good list of candidates. He'll pick one.
On to another CNBC-TV18 exclusive. Lockheed Martin is committed to setting up a second final assembly line for the C-130J aircraft in India if selected for the medium transport aircraft program. The company's vice president has said that the company plans to add autonomous tech, advanced avionics and higher fuel range for aircraft in India.
We have continued to evolve the C-130J, and we will continue to evolve it as we bring on new capabilities, hopefully winning the competition here for the medium transport airplane. We are looking at how do we bring that over here to India and replace those suppliers with Indian suppliers to be able to add additional content to the airplane. As we progress forward, we see that MRO, maintenance, repair, and overhaul facility really grow into a capacity that could potentially serve the entire Indo-Pacific region.
Now, Russian, Ukrainian and U.S. officials' trilateral summit began in Abu Dhabi. The meeting comes after Russian President Putin met U.S. envoy Steve Witkoff and Donald Trump's son-in-law, Jared Kushner. Ukraine's President Zelensky, who said that the talks would last 2 days, hit out at European leaders during his speech at the WEF's annual conference in Davos. He accused the EU of waiting for direction from Donald Trump rather than taking action.
Just last year, here in Davos, I ended my speech with the words, "Europe needs to know how to defend itself." A year has passed and nothing has changed. We are still in a situation where I must say the same words, but why? The answer is not just about the threats that exist or may appear. Each year brings something new for Europe and for the world.
Well, with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates will continue right here on CNBC TV 18.